Hi, this is Kevin Flinn and Ron Ireland. We're Kansas City real estate experts, and today we are here to talk about the November 2024 market updates. So, what are your thoughts on the market here this month, Ron?
So I'm going to kind of go over that and kind of where the rates are at, right? Rates are actually trending on down, so that's a good thing for the market out there. And I think we'll continue to see that, maybe a couple bumps in the road as the Federal Reserve does some of their adjusting to the market out there. But the market is getting a little better, it looks like, and more open. But on the other hand, I'm also going to go into, we're seeing some tightening from Fannie Mae for whatever reason, on some making it a little more difficult. But there are some new outlets out there for loans for a lot of people who want to be able to buy a house. So we're going to kind of go over some of those new things and kind of where the market's going.
So, overall, I think when we go through the numbers here, you'll see the trends. We're heading into the winter months. With Thanksgiving and the election in November, things are just a little bit slower than what they had been earlier in the year, which we expected, and we'll probably continue to see those trends for the next couple of 3 months until it opens back up in the spring. So with that said, we'll go ahead and start digging into our numbers.
Okay, the great news is that the markets seem to continue to pick up. We're seeing sales pick up since the election, and typically right before an election, everything becomes pretty flat. That's kind of typical of how it's been through the last 50 years, right? But the markets seem to be picking up a little bit. I'm getting a little busy personally, and most of the agents I'm talking to are seeing more contracts written, not particularly a lot of new listings coming on. And so, with that, we're seeing a little more competition out there for the properties that are out there. But I think once we get in after the first of the year, we'll see those listings start picking up, and I expect a good spring. Now, the great information is that consumer confidence was up considerably over the previous month, and that means that the consumer thinks it's a good time to buy things. And part of that is that they're going to be buying real estate. So that's why I'm telling everybody, get out there and buy something soon, because by spring, a lot of people are going to be out there looking, buying, and the price will continue to go up, where the price have gotten a little flat right now, and we'll continue to see that. So as far as interest rates continue to get better, and they have, since they jumped, mortgage rates, long-term rates jumped up in September, and have slowly from them been slowly coming down. And they have continued since the election, have continued to come down. Now, when I say continue to come down, they got to a high in the middle of September of about 7.5, and then have slowly come down to about 6.5, where we are for 30-year fixed owner-occupied rates out there. So some great information about there's more availability of money. I think we'll see more properties come on. That's something Kevin will talk about as we get into the spring, right? But we're currently seeing Fannie Mae. Everybody's heard of Fannie Mae, right? They've been tightening down their requirements to qualify a loan a little bit, not a lot, but a little bit. Having how much time you've been on a job, or your ratios, what you have to qualify, and things like that. But the great part about it is there are products out there called non-QM products. The Fannie Mae's, the Freddie Macs of the world are called QM products. So the non-QM products have actually been loosening their guidelines a little bit to make it more easier to qualify. So this is great news if you're self-employed, because there's a lot of self-employed products out there for the in the non-QM space. Like they'll use your bank statements or your 1099 instead of that W-2 or those tax returns to qualify you. So I'm seeing more and more advantage out there, and for investors too. I'm seeing those conditions out there to buy properties under these non-QM loans become more and more prevalent out there. So instead of those, conventional loans, FHA, VA, what we all think of those typical loan types out there, right? We're seeing a lot of new non-QM, what bank statement programs, 1099 programs, DSCR programs that you can use to buy a home. So, that's the exciting part, is that there's new markets opening up for homeowners and investors as we get into the new year.
All right, the first numbers we're going to talk about today are our new listings. So new listings for the month of November in the greater Kansas City market was 3,457. That is down from October, which is 4,790, and September, which is 4,870. And so we are seeing a decrease in number of new listings. Like I said, we expect that because we're getting into colder months. A couple big events happened in November with Thanksgiving and then the election, which just kind of slows people down from doing a lot of that kind of business. Along with the new listings, our next number is the number of closings. So our number of closings in November also trended down. We had 2,950 closings in November compared to 3,491 in October. The closings in October were slightly higher than September, but still lower than August, July, June, etc. Again, we expected that to some degree. But closings, usually have a month to month and a half lag time from when houses go under contract. So that's really just showing us that, September and October, there just weren't as many houses going under contract because the closings have declined in November. We will expect that again for probably the next couple of months. And we'll just have to keep following that trend. Okay, the next numbers we're going to look at is the closing price. The closing price median number for the month of November was 299,900, so just slightly below 300,000. That's a slight uptick from October, which was 2,970,000, but down from September, which is 300,000. So we're really kind of seeing the closing prices kind of sit in the same ballpark. Not really a dramatic shift one way or another. Just a little, you're always going to have some variances, but that's pretty close to being even. Now, the listing prices, the original listing prices, we are seeing a decrease. In November, the original listing price median was 279,900. Okay, that is down from October, which is 293,000, and also from September, which is 299,000. So that's almost a $20,000 decrease in median list prices over a 2-month period. Now that could just be a trend of fewer higher priced homes being listed, but it also could mean that people are listing for a lower price than what they had been because they weren't seeing their houses moving as much. Also, to go along with those list prices is our days to sell. Our days to sell has increased to 19 days on market. That's up from 17 in October, 16 in September. So we would expect that, especially over winter. If we looked at the winter numbers last year, January was 27 days, February was 28 days. So we expect those days on market to continue to go up for the next couple of months, 3 months, and then start to go down again come March, April timeframe, when the spring market really gets into full effect. Okay, the next number we're comparing is the chart here. That's showing my original list price and my closed sales price. As you can see in November, the closed sales price was actually higher than the original list price. This is a change from the last 2 or 3 months when those two numbers were pretty close together. You see November, we are having a bit of a gap, which means that our sales prices are staying fairly flat, but our listing prices are coming down. So that's a trend that we want to keep an eye on. and see where that goes as we head forward. Our final graph here today shows our sales price, our number of sales by price range. So as you can see, the green bars are 2022, the blue bars is 2023, and then the purple bars is this year, 2024. And this is all year to date through the end of November, or excuse me, through the end, through the end of November. So in the 0 to 200,000 range, we see a significant decrease in number of sales. And that continues through the $200,000 to $300,000 range. But then the $300,000 to $400,000 range, we do see where here in 2024, we've actually sold more houses than we did in 23. We're still down from 22 numbers, but we are showing an increase of that. Now then, as we get up above the $500,000 range, we're seeing the numbers being fairly consistent throughout the 3 years, as number of houses being sold. But it is just going to show that we are starting to see in our bread and butter category there, that $300,000 to $400,000 range, where we are starting to sell a few more houses than we did last year. Hopefully that trend will continue on into 2025, and we do sell a lot more houses in that price range. Okay, and to wrap up, what we're seeing is we're going into a slower market here in the winter, which we do expect. Right now is a good time for all of our investors to be picking up those project houses that they want to do to get them ready for that spring market, because prices are. They're not going to go any lower than what they are now, but there is still some stuff available. So let's get out there and look for those. And let's get your final thoughts there, Ron.
So, whether you're an investor or a homeowner wanting to buy a house, this is a great time to buy it before really the market. We get into the spring and you start looking and the prices are going to start going up considerably. So they're a little flat right now on prices. So a great time to get out there and buy. Interest rates are dropping. So, you can still get a good interest rate. Now after the first of the year, I think interest rates will still continue to come down. Right? So you'll get a little bit better interest rate, but you're going to get a much better buy by buying now than waiting for the spring, because in the spring, it will get busy in the spring.
So to wrap up, this is Kevin Flinn and Ron Ireland, your Kansas City real estate experts, here to assist you in buying your next home, land, or investment property. This video has been brought to you by the Kansas City real estate experts. Kevin Flinn, a realtor with KC Resource Group, brokered by Platinum Realty. Ron Ireland, a loan officer with UFFC Mortgage. Together, your trusted team in purchasing, selling, and financing homes, land, and investment properties in Kansas City and surrounding communities.